Hello, everyone, and thank you for tuning in. Today, we're going to be looking at Ethereum, its valuations against the US dollar alone. And we're here going to be putting in some projections for a market cycle peak. Now, um, I know things are getting pretty exciting. Uh, Bitcoin is broken above the 20-day, 200-day moving average. Things are looking pretty bullish. Ethereum's trading over $3,000. And I want to make a video on, like I talk a lot about maybe the shorter term time frames, not macro time frames as much, in the sense of what my goal is, in terms of my portfolio. So I'm hoping in this video that sheds a little bit of light on kind of the target essentially, for Ethereum in my portfolio. Now, as if you may or may not know, Ethereum is the second largest position in my portfolio. It always has been, always second to Bitcoin. Also, what we're going to be using is the 20-month moving average, as well as the percentage difference of the 20-month moving average. So each bar here represents a month, also represents, as you can see on the number here, uh, the percentage difference between the closing price of the month to the 20-month moving average. So, how can we use this as a tool to help get an idea on what the peak for Ethereum might look like? This doesn't necessarily talk about timing. If you want to know about timing about Bitcoin, you can look at my previous video where I use the time lengths to determine, when the next leg of the run is going to kick in. With Ethereum, uh, when I look at Ethereum, it's usually in the lens of Bitcoin, in the lens of Ether BTC, and also where Bitcoin is in its own chart. So with that said, um, Ethereum is currently trading at $3,146. Uh, the distance between the Ethereum and the 20-month moving average, the highest it's gotten this time around was 356%. We know that in prior cycles, Ethereum had probably a better run, right? You can see here in the month of May 2017, the distance was 800%, and from the all-time high was 426%. So we can also determine, roughly the cap on how high Ethereum could go, in relation to the 20-month moving average. What I mean by that is we know how we can kind of accurately guess what the maximum percentage distance between the price of Ethereum and the 20-month moving average is going to be. How do we know this? Well, we can look at Bitcoin. When we look at Bitcoin, you could see that each cycle, each cycle shows a lower high in relation to the distance between the price and the 20-month moving average. We see the high was $887 in 2013 between the 20-month moving average. In 2017, it was 387. Currently, right now, it's 259, roughly around there. So on and so forth, right? So again, you could see that, um, it's getting lower. And so we can guess that it will not go as high as the previous cycle. So we know that this cycle that we're in probably won't go further than 800% above the 20-month moving average. Okay. That I think that is one thing that we all need to understand, is that of diminishing returns, if you want to call it that, of lower highs, of percentage gain. It's how markets work. Things get less volatile over time the longer they last. And so with Bitcoin, you could see that that is happening, which is the longest kind of, the longest time frame we have. And so we can then apply it to Ethereum, probably other cryptocurrencies as well. So with that said, in this cycle, we probably won't go as high as 800. I would also gander that we don't go as high as the previous, what we just experienced, which was 356%. So with that said, let's give let's look back at Bitcoin actually and see, you know, it kind of you could see like extension of 357, 350, 387, 294, um, so on and so forth. So with that said, what would, Ethereum look like? You can look at May 2017 and notice that it was an 800% difference, but you could also look at the prior all-time high at $1,400 just a year later, and it's actually lower. It's 426. So note that the nominal all-time high Ethereum's going to print doesn't necessarily have to correspond with the largest percentage difference between the 20-month moving average and the price. In fact, it's most likely going to be lower. With that said, if we take into account that 356%, we won't go as high as that. Maybe we could talk about 171% as an example. From where we are right now, we're already at 176%. But we know this is not the market. This is not the market peak for Ethereum, or at least we're pretty confident about that. So what we can do is we can extend the 20-month moving average. At the current trajectory it's at, starting from the beginning of the year, it's going up, and it will continue to go up until we see a market correction at the end of the bull run. But we can extend this line. Roughly speaking, obviously it's not following it to a T, and it's going to deviate depending on what the price action is for the month to month. But we can generally extend this and get a baseline of what we might be dealing with. So, let's talk about a year from now. A year from now, we'll see August. Here we go. The 20-month moving average, might be at 20-month moving average will be roughly around maybe where the price is now, actually around $33,000. Okay, it might be a little lower when if it's not going up as high, but $3,000 might be a place to look, or just under 3,000. We take our price extension, right? Price range, line it up to August on the line, so around 3,000, and then we extend it to $176 or 171% or so. And we see that it's about 7,800%. Sorry, 7,800 US dollars. And so this is where I get my kind of my ballpark estimate of Ethereum of like $8,000 to $10,000. Because like if we take the larger percentages, like say 291 as an example, you could see that that gets us pretty close to, or just above $10,000. It takes us actually to 11,000. And if we take note of 356, so 356%, which I would argue to be the maximum percentage difference between us and the 20-month moving average, that would be around $12,000. So if we were to cut it up into three, you have your potential 170% price difference between the 20-month moving average and the price, which is pretty doable. And then you have something maybe at 260%, which is I would say pushing it. And then you have the absolute max that I would argue that would allow Ethereum to be at for this cycle. And that would be about 350%. And as you can see, that takes us to about $12,000. Am I saying that Ethereum is going to go to $12,000? Not necessarily. I wouldn't bet on it, is what I would say. What I would say though is that this is probably the absolute peak that is possible for this cycle. That is possible. It can go higher, but probably around that price, even like at $10,000, folks. I'll probably be out of the market for Ethereum by then. So $12,000 doesn't really make a difference for me. It might for you, but not for me because I'll probably be out of it. What I'm trying to say is that the range is pretty broad. We're talking about $4,000 price range between $8,000 and $12,000. Um, it also depends on how fast we get there, right? Um, if, say, for example, we rally up this month, right, and we get to 356% or so, that brings us to $4,000, um, which I think that would be pretty crazy of an extension. But we would probably have to change course, or I would have to change course on my projections for Ethereum. But I would argue that that although Ethereum can last quite some time at higher levels of distance between the moving average, um, I would also keep in mind that determining the market cycle peak isn't necessarily solely based on this. It is based on Bitcoin. Is Bitcoin making its market cycle peak? There's ways to determine that as well. Also looking at the same tools as well as the time length, as well as the RSI on a longer term time frame like the monthly. Like all these take into consideration on when I would be jumping ship from Ethereum. And I love Ethereum, but I'm here to, make money. So I don't have any qualms of selling my entire Ethereum position should I find the opportunity to. But I hope this video was helpful. It's a pretty simple way to indicate, market cycle peaks for assets, right? Um, Against the US dollar. You see that you see the lower highs that we're printing, and the 20-month moving average is a lagging indicator. But because it's on a longer term time frame, there's less ups and downs that you normally see with, like, say, a shorter term time frame moving average, and it's more of a smooth curve, right? Like even this, what we see now, is like an S curve almost. It's very smooth, and it's pretty easy to determine projection. And then you just calculate the percent distance between the moving average and the price, and you can get a ballpark idea on where an asset could be in the next year should things continue the way they are. So with that said, $8 to $12,000. I am targeting $8 to $10,000. Um, in that sense. But note that, looking at the 20-month moving average and pushing it a year allows for a cap of around $12,000 to be the absolute upper limit, I think, for the extension between the price and the 20-month moving average. I hope this was helpful. I'm probably going to do more videos like this, considering we're getting into the second leg, or I would argue that we could be getting into the second leg of the cycle. So just touching base on, Ethereum, Bitcoin, how I determine Bitcoin's market cycle peak price, how I would determine, maybe Cardano's is another good example. VeChain is a pretty good example. I might do VeChain soon. But yeah, that's all for today, you guys. Thank you so much for watching. Take care. Bye bye.